What is happening, crypto fam? The digital asset space is absolutely on fire, and we've got to break down the biggest moves. The pace of innovation and market shifts is relentless, and if you're not plugged in, you're missing out. Today, we've got some major plays shaking up the landscape, from strategic financial maneuvers to significant capital rotations that could redefine the market. Get ready, because this is your essential download of what you need to know right now. First up, we're diving deep into a company that's making massive waves with its bold approach to digital asset accumulation. Is this a genius move or a risky gamble? We'll unpack the strategy and what it means for the broader market. Then, we're tracking a seismic shift as billions are on the move, with major players reallocating their assets. Is this a sign of things to come, or just a temporary rebalancing? We've got the details you won't find anywhere else. Plus, we're looking at a fascinating corporate strategy that's putting digital assets at the heart of its growth plan, aiming to tackle inflation head-on. Is this the blueprint for future corporate finance? And finally, we're dissecting a critical development that shows whales are making some significant portfolio adjustments, moving vast sums of money. What does this mean for the price action and the overall market sentiment? Stick around, because this episode is packed with insights that could shape your understanding of where the market is headed. Don't go anywhere. Make sure you're subscribed and hit that notification bell so you never miss an update. A bold corporate gambit unveiled. This Japanese holding company is making headlines with its aggressive Bitcoin strategy. Metaplanet, a Japanese holding company, has dramatically expanded its Bitcoin reserves, now holding a staggering 20,000 BTC, valued at approximately $3.8 billion. This significant accumulation was bolstered by a recent $112 million acquisition, bringing its total holdings to a level that places it sixth globally among public companies with Bitcoin treasuries. The strategic purchase was executed at an average price of 16.33 million yen per Bitcoin, roughly $111,000, with the total transaction amounting to 16.48 billion yen. This move marks a substantial acceleration in Metaplanet's Bitcoin strategy, more than doubling its holdings since late June 2025, when it held just over 13,000 BTC. The company financed these acquisitions through a mix of capital market activities and its own operating income. Looking ahead, Metaplanet has ambitious plans to raise an additional 130 billion yen, equivalent to about $880 million, through an international share offering, with the explicit intention of further increasing its Bitcoin reserves over the next 2 months. Internally, Metaplanet tracks its performance using metrics like BTC yield, which measures the value of Bitcoin holdings against fully diluted shares. For the quarter ending September 1, this metric stood at 30.7%, having previously reached as high as 309.8% earlier in the year, underscoring the rapid growth of its digital asset portfolio. Management clarifies that these metrics, including BTC gain and BTC gain, are not conventional financial indicators, but are used internally to gauge how Bitcoin purchases enhance shareholder value. Metaplanet's approach mirrors that of MicroStrategy, a U.S. firm that has also adopted Bitcoin as a primary reserve asset, both companies positioning Bitcoin as a hedge against inflation and a tool to protect shareholder value against dilution. Metaplanet officially integrated Bitcoin treasury operations into its core business strategy in December 2024 and has since been actively raising capital to convert into Bitcoin. The company's global outreach has also been highlighted by its association with the Trump family, with Eric Trump serving as an advisor and slated to attend an upcoming shareholder meeting in Tokyo. This connection signals a broader trend of established figures and entities venturing into the digital asset space. Despite the aggressive Bitcoin accumulation, Metaplanet stock experienced a slight dip in early trading following the announcement, though U.S.-listed shares saw a modest gain the previous day. The broader market sentiment for Bitcoin itself has also shown some volatility, with prices experiencing a pullback. The community is closely watching how this corporate-backed Bitcoin strategy unfolds, and whether it will set a precedent for other companies navigating economic uncertainty. But is this aggressive accumulation a sustainable strategy? We'll explore the potential upsides and downsides next. Now, let's pivot to a massive capital rotation that's making waves across the crypto ocean. Whales dive into Ether, shifting billions from Bitcoin. Major crypto players are reallocating significant capital, signaling a potential shift in market dominance. In a dramatic display of market sentiment and strategic portfolio adjustments, significant capital is flowing out of Bitcoin and into Ethereum, with major cryptocurrency whales reportedly shifting approximately $4 billion from BTC to ETH. This trend is fueling discussions about a potential alt season, where altcoins could begin to outperform Bitcoin, driven by rising institutional interest in Ethereum and strategic profit-taking by large holders. Data from blockchain analytics platforms reveals that the market's largest investors are actively rebalancing their portfolios, with Ether emerging as a preferred destination for capital reallocation. A prominent example is an $11 billion Bitcoin whale that has been systematically selling off Bitcoin to acquire Ether. This whale recently divested $215 million worth of Bitcoin to purchase $216 million in Ether through Hyperliquid, increasing its total ETH holdings to over 886,000 tokens, valued at more than $4 billion. This accumulation alone surpasses the holdings of SharpLink Gaming, the second largest corporate Ether holder, which possesses 797,000 ETH valued at $3.5 billion. While still behind Bitmain Immersion's 1.8 million ETH, this whale's actions are indicative of a broader trend of institutional capital flowing into Ethereum. The movement of capital is not isolated. Over the past week, 9 other significant whale addresses have acquired a combined $456 million in Ethereum. Notably, 5 of these transactions originated from the custodian BitGo, and the remainder came from Galaxy Digital's over-the-counter trading desk, signaling substantial institutional backing. Further reinforcing this trend, 8 newly created wallets have acquired an additional 35,948 ETH, worth approximately $164 million, from platforms like FalconX and Galaxy Digital within an 8-hour window. These coordinated moves are interpreted as a strong signal of deepening institutional conviction in Ethereum's underlying fundamentals and future potential. The timing of these capital shifts aligns with diverging price performances between the 2 leading cryptocurrencies. Over the last month, Ether has seen a notable increase in value, while Bitcoin has experienced a downturn from its recent highs. Bitcoin has pulled back from its peak, trading in a range that reflects profit-taking and selling pressure, whereas Ether has maintained a stronger position relative to its all-time high, supported by positive market dynamics. Analysts suggest that Ethereum's relative strength is bolstered by increasing corporate adoption and improvements in its on-chain activity, contrasting with Bitcoin's current price pressures attributed to strategic sell-offs by older whale addresses. Market volatility has also been influenced by whale activity, particularly over recent weekends, where large volumes of Bitcoin have been offloaded during periods of lower liquidity to minimize price impact. Despite this selling pressure, on-chain data indicates that a significant portion of Bitcoin movement represents a rotation between whale wallets rather than a complete exit from the market. Accumulation among large addresses continues, with a notable increase in whale reserves observed over the past month. Concurrently, Ethereum spot ETFs have seen substantial inflows, absorbing billions of dollars in ETH over recent trading days, further underscoring the growing institutional demand for the digital asset. This confluence of factors suggests a significant capital rotation away from Bitcoin and towards altcoins perceived to have greater growth potential. But what does this mean for the average investor? We'll break down the potential impact next. Now, let's turn our attention to another significant development concerning corporate treasury strategies. Metaplanet's Bitcoin accumulation, a strategic flywheel. This Japanese holding company's aggressive Bitcoin strategy is being scrutinized for its long-term viability. Metaplanet, a Japanese holding company that has publicly declared its intention to integrate Bitcoin into its core treasury strategy, is making significant moves in the cryptocurrency market. The company recently acquired an additional 1,009 BTC for $112 million, bringing its total Bitcoin holdings to 20,000 BTC, valued at approximately $3.8 billion. This acquisition positions Metaplanet as the sixth-largest public company globally in terms of Bitcoin reserves. The purchase was made at an average price of 16.33 million yen per Bitcoin, or about $111,000, with the total transaction valued at 16.48 billion yen. This latest acquisition represents a substantial acceleration of Metaplanet's Bitcoin accumulation strategy. Since the end of June 2025, the company has more than doubled its Bitcoin holdings, increasing them from just over 13,000 BTC to the current 20,000 BTC as of September 1. The funding for these purchases has been derived from a combination of capital market activities and the company's operating income. Metaplanet has also signaled its intent to further bolster its reserves by planning to raise approximately 130 billion yen, roughly $880 million, through an international share offering. These funds are earmarked for additional Bitcoin acquisitions over the next 2 months. Internally, Metaplanet utilizes a metric called BTC yield, which assesses the value of its Bitcoin holdings relative to its fully diluted shares. For the quarter ending September 1, this BTC yield stood at 30.7%. Earlier in 2025, the metric had reached as high as 309.8%, illustrating the aggressive growth trajectory of the company's crypto assets. Metaplanet's leadership emphasizes that metrics like BTC yield, BTC gain, and BTC gain are not traditional financial reporting standards, but internal tools designed to evaluate the accretive impact of Bitcoin purchases on shareholder value. The company's strategy has drawn parallels with MicroStrategy, a U.S. firm that has also adopted Bitcoin as its primary treasury reserve asset. Both companies advocate for Bitcoin as a hedge against inflation and a means to protect shareholder value against potential stock dilution. Metaplanet formally adopted Bitcoin treasury operations as a central pillar of its business strategy in December 2024 and has since been actively raising capital to convert into Bitcoin. The company's global expansion efforts have also gained attention through its association with the Trump family, with Eric Trump serving as an advisor and expected to attend a shareholder meeting in Tokyo. This involvement suggests a broader trend of established entities and influential figures diversifying into the cryptocurrency space. In market reaction, Metaplanet's stock saw a slight decrease during morning trading in Japan following the announcement of the latest acquisition, although its US-listed shares closed higher the previous day. Bitcoin's price also experienced some fluctuation, indicating a mixed market sentiment towards such corporate treasury moves. The community is keenly observing whether Metaplanet's approach will serve as a replicable model for other corporations seeking to leverage digital assets in their financial strategies. This strategic shift raises questions about future corporate treasury management. But first, let's look at how other major players are adjusting their portfolios. Now, we're turning our attention to a significant shift in capital flow within the broader crypto market. Bitcoin faces strategic sell-off as whales pivot to Ether. Major cryptocurrency holders are moving billions from Bitcoin to Ethereum, signaling potential altcoin dominance. In a significant development for the cryptocurrency market, a substantial rotation of capital is occurring, with major crypto whales reportedly shifting approximately $4 billion from Bitcoin BTC to Ethereum ETH. This trend is intensifying speculation that the market may be entering a phase of altcoin dominance, often referred to as alt season, driven by increasing institutional interest in ETH and strategic profit-taking by large holders. On-chain data reveals that the largest holders are actively adjusting their portfolios, with Ether becoming a preferred destination for capital reallocation. One of the most notable movements involves an $11 billion Bitcoin whale that has been progressively selling BTC to acquire ETH. This whale recently sold $215 million worth of Bitcoin to purchase $216 million in Ether via Hyperliquid, bringing its total ETH holdings to 886,371 tokens, valued at over $4 billion. This accumulation surpasses that of Sharplink Gaming, identified as the second largest corporate Ether holder, with 797,000 ETH valued at $3.5 billion. While still trailing Bitmine Immersion's 1.8 million ETH, this whale's actions are seen as a strong indicator of broader institutional interest in Ethereum. The shift to Ether is being mirrored across the whale community. Over the past week, 9 massive whale addresses have collectively acquired $456 million in Ethereum. Significantly, 5 of these transfers originated from the custodian BitGo, and the remainder were sourced from Galaxy Digital's over-the-counter trading desk, suggesting substantial institutional involvement. Furthermore, 8 newly created wallets have acquired an additional 35,948 ETH, worth approximately $164 million, from platforms such as FalconX and Galaxy Digital within an 8-hour period. These synchronized movements are interpreted as a sign of deepening institutional confidence in Ethereum's fundamental value proposition and future growth prospects. The timing of these portfolio adjustments coincides with diverging price performances between Bitcoin and Ether. In the past month, Ether has experienced positive gains, while Bitcoin has seen a decline from its recent all-time highs. Bitcoin's price correction is attributed partly to profit-taking by older whale addresses, while Ether's relative strength is bolstered by factors such as increased corporate accumulation and improved on-chain activity. Whale activity has also contributed to short-term market volatility. Over the recent weekend, Bitcoin experienced a price drop after a prominent whale offloaded a significant amount of BTC in 2 separate sales, strategically executing these trades during periods of low liquidity to mitigate price impact. These weekend selling patterns differ from earlier market dynamics, where off-hours trading sometimes led to price pumps. Whales are now leveraging these times for large volume offloads with less market disruption. Despite the selling pressure, on-chain data suggests that a considerable portion of BTC movement represents a turnover between whale wallets rather than outright liquidation. Accumulation among large addresses continues, with a notable 45% increase in whale reserves observed over the past month. Meanwhile, Ethereum spot ETFs have absorbed $1.8 billion in ETH inflows over the last 5 trading days, further signaling robust institutional demand for the digital asset. This capital rotation trend reinforces the view that significant capital is increasingly moving away from Bitcoin's established position towards altcoins with perceived higher growth potential. This massive capital shift could redefine market dynamics. But what does this mean for the future of corporate treasury management? We'll explore that next. And that's a wrap on today's top stories. Don't forget to subscribe. All right, let's do a lightning recap. Metaplanet is making massive Bitcoin plays, potentially setting a new corporate standard. Whales are shifting billions from Bitcoin to Ether, sparking altcoin dominance talk. Metaplanet's Bitcoin strategy is being watched closely as a potential inflation hedge, and major whales are moving vast sums, signaling a strategic pivot in the market. If you found this info valuable, smash that like button, subscribe to Bitcoin Bulletin, ring that notification bell so you don't miss a single update, and hit us up in the comments with your thoughts. You can also follow us on all social platforms for more real-time insights. Thanks for watching.